Good morning. It is a great morning, and I hope everybody's having a great week and a great new year. Wanted to talk about interest rates and where they're going. We are being asked this an awful lot. We're being asked it from clients, we're being asked it from real estate agents, and what we're hearing. So I want to show you some stuff. Now, this is geared towards agents, but it's really good for clients too. Let's take a look at a couple things here. Oops, sorry about that. Already had it shared. So these are from a website called Mortgage News Daily. And what Mortgage News Daily is they're a site that puts out daily information about the mortgage market and what's going on, to specifically more geared towards lenders, obviously. But what's really interesting here is you can see they are quoting an interest rate on a 30-year fix today of 6.17%. And this is where you got to be really careful because they're even quoting different rates here on the same page. Freddie Mac is quoting 6.33, and the Mortgage Bankers Association is quoting 6.42%, and that's actually with 0.73 points. So it's basically 3/4 of a point to get that interest rate. A couple things you need to know. About 2 months ago, maybe, Fannie or Freddie Mac updated their website. So now when they give you rates, they're no longer giving you points. So there's still points involved, and it's just they're not telling us what they were. They used to tell us what the points were. So that's going to show 0 for the most part going forward. So you got to be really, really careful on what you are disclosing out there because there's 32 different factors that go into quoting an interest rate for a client. So if you're quoting a client 6.1 or 6.17% and the rate's more like 6.42, the client is going to get upset. So be very, very careful and go off of the rates that you're getting from the lender, not from a website. Because this is basically like telling a client, hey, you can sell your house for whatever Zillow says your house is worth, right? That is what this is showing. So just be very, very careful. Now, I do want to show you a couple real quick things that is definitely affecting our markets right now. So this is the Consumer Price Index. Now, this came out last week, and if you follow along with me, you know that the Consumer Price Index measures inflation on a wholesale level. I'm sorry, consumer inflation, not the wholesale level. That's the next one we're going to go to. And what we do is we add up the most recent 12 months. So prior to last week, we were adding up December 21 through November 22nd. Well, last week, we got December 22's inflation number, and it was actually a negative. We were negative 0.1. So we actually saw a reduction in inflation. So this is great news. And what happened was we dropped off this 0.6 number and picked up -1. So it really, really helped to lower our headline inflation number. And there you see the headline inflation in gold, the core inflation in purple. Now, just a reminder, the Fed does have upcoming meetings on February 1st and March 22nd. They are expected to continue to raise the federal funds rate, which in turn will lower inflation. And when inflation comes down, interest rates on mortgages come down. So it is a good thing for our market. And the other part of the CPI, the Consumer Price Index, is we're looking at the core inflation because that is what the Fed is looking at when they're deciding how much they're going to raise interest rates. Now, same thing, you're looking at the most recent 12 months, but you're going to see a big decline on May 10th because May 10th is when we get April's CPI number. And we got to get over this hump here. We're getting over this one right now, but we have to get over this next hump. And you are going to see inflation keep coming down. So the core inflation right now is at 5.7, and that was really, really good. It was what we expected, and that's why interest rates are starting to come down. Because remember, we saw headline inflation of 9.1 just a few months ago, and now we're down in the 6s. So it is coming down. It's just going to take a little bit of time. And the other thing I want to show you is look at rates. They're getting better and better. The green is good, very good. And you can see today we are testing this level of resistance, and we've tested it multiple times here the past couple of months here. So there's a chance we can break through this today. And the reasoning is because producer price index came out this morning, and it came out better than we expected. It took our headline inflation for producers from 7.3 to 6.2, and their core rate dropped from 6.2 to 5.5. This is what the wholesalers are buying goods at to make the products that they're selling to consumers. So as their inflation comes down, it's going to lower the consumer inflation as well. So this is really, really good. And if we look at the 10-year Treasury chart, remember interest rates are not based off the 10-year Treasury, but they do have a correlation in the long term when you're looking at it. And it's actually broken beneath this level of support. And that is a really, really good thing, because we are expecting to the 10-year Treasury to go down to 3%. Right now it's at 3.41. And that is going to help lower the mortgage rates as well. So things are on the right track, and just hang in there, because rates are coming down. Multiple sources are saying we could see in the fives by summer. So I don't know, but we're definitely on the right track. I do think rates are going to come down. I will tell you, if you find a house right now, your client does, they need to buy it now. They can always refinance down the road. Homes are still appreciating. It's just the amount of depreciation is slowing, which we needed it to, because we couldn't sustain that 20% inflation the way we were. So everything's going well in the market. It's just that if they wait to buy and they wait for those rates to come down, more buyers are going to be entering the market. We know that it's going to start going back to multiple offers, bidding above ask. So it's much better for those buyers to get into the market now. And I'll do a video on that as to why, and show you some different models of financing and how that affects it. So it's much better for them to buy right now. Any questions, don't hesitate to reach out to the Rebecca Foote Mortgage team. We are here to help, and looking forward to making 2023 a great year.